I get this single question asked so many times. This time it came from Praveen. I hope I'm saying your name correctly. And what Praveen is saying is that sometimes he is trading with a trend and all of a sudden the trend reverses and goes against him. And that horrifies him. And this is something that you guys struggle so much with that I decided to put a single video just focusing on this one topic. Hi everyone, I'm Pedro and today I'm going to teach you 5 ways to detect the end of a trend. Number 4 is my favorite, and in the end you will also get a bonus tip. So stay until the end and let's start this. The head and shoulders chart pattern. The head and shoulders is a chart pattern that appears when a trend changes. Here we have an example of an uptrend. Price makes a bigger leg to the upside, then a smaller leg to the downside, and then on the next leg to the upside the previous high is broken. Then it makes another small leg to the downside, and then a bigger leg to the upside where the previous high is broken. And while it keeps doing this shape, we consider that the price is on an uptrend. But at some point the legs to the downside start to be bigger. And when the price tries to go up again to break the previous high, it fails and starts to go down. So now we have highs that are lower than the previous highs, and we have lows that are lower than the previous highs. We have bigger legs to the downside, small corrections to the downside, and then bigger legs to the downside again, breaking the previous low. In this trend change example, we have the perfect head and shoulders chart pattern. And the head and shoulders is formed by 3 peaks. We have one peak, we have another peak, and then we have the last peak. The first 2 peaks are still on the uptrend, so the second peak is above the previous high. And then when we go for the third peak, it fails to keep going up, and it actually makes a lower low. It's exactly at this single point when you see that the price fails to keep going and gives you here a rejection pattern, a bearish pattern, that you should change your bias from an uptrend to a downtrend. By the way, this is called head and shoulders because you can put some kind of head here and maybe a shoulder. This doesn't look very good, but you get the point. So let's look at some chart head and shoulders patterns. So this is our classic uptrend. The price starts from a low, it makes a high, it comes back lower, it doesn't break the previous low, it makes another leg to the upside, a bigger one, then it makes a new low again. This low doesn't come to the previous low, then it makes another move to the upside, and keeps doing this over and over while it's on an uptrend. So while we are here on this uptrend, we would expect now a new low and a continuation to the upside, a break of this previous high. Let's see what happens. The price failed to go up here, and it was immediately rejected to the downside with a strong red candle. This is the rejection that we are looking for to spot a trend change. The price fails to break the previous high. So if you are long and you see this rejection pattern, the price failing to break the previous high, you can consider eventually closing your long and eventually starting a short trade. Here for me it would be a short opportunity. I would short as soon as this green candle is broken. I would short and try to capture the next leg to the downside. But let's see what happens after this. Beautiful move to the downside and the downtrend starting. Now there are some variations of this head and shoulders pattern. There are people that like to see the low of the first shoulder broken before they enter, but I am more aggressive with my entries, and as soon as I see that the price fails to make a new high and it gives me a nice bearish engulfing pattern, this is where I short and I try to capture the next move to the downside. Now let's look at the inverted head and shoulders. Inverted head and shoulders appears after a downtrend. So it's the exact same shape but inverted. So we are on a downtrend here, the price goes down, then it tries to go up, it only makes a small leg to the upside, and then a big leg to the downside. Then it makes a small leg to the upside, and then a big leg to the downside. Our lows are broken, our lows are broken. Now what should we expect here if the price wanted to continue on a downtrend? We should expect some move to the upside and then another bigger leg to the downside, breaking the previous low. But let just the price tell us what he wants to do and then we just follow it. Okay, so instead of having a reaction here, like we were expecting after a small move to the upside, the price actually kept going up and broke this previous high. So we can remove this and we can draw this leg to the upside that actually even broke that previous high there. This was not supposed to be broken if we want to continue on a downtrend. Now that the price made this bigger move to the upside, we want to see some move here. We can't see the price reaching this bottom. We don't want to see this broken again. We want to see some kind of reaction here that will allow us to enter and go long. But let's see what happens. This is our reaction, guys. The price tries to go down, but when it reaches more or less the level of this previous low here, it is rejected immediately to the upside. Guys, this for me, this is an entry here to go long. As soon as I see this red candle being broken by this strong green candle, this is where I enter and where I go long. For me, the trend changes here. So we have our first shoulder here, we have our head here, and then we have our second shoulder here. The price failed to make a new low and break this. So this is shoulder, head and shoulder, inverted of course. And what happens after this? I ride my entry and I try to get out somewhere after a new leg to the upside. So guys, if you are short and you see the price breaking the previous high, this is a signal that the trend may be about to reverse and that eventually you should consider closing your short trade and start looking for longs. If you want to learn more about how I trade, I have a 6-day free trading course on my website. The second way to detect the end of a trend is the break of a moving average. Let's look at a bearish moving average break. Moving averages are trend indicators, and while the price is above the moving average, we consider that it's on a bullish move. If the price was jumping below the moving average, this is considered a bearish move, a bearish trend. So what we are seeing here is the price jumping above a moving average. This is where our bias should be long. The price is jumping above, and our bias will change from long, from bullish to bearish when the price breaks the moving average. Because at some point the moving average will start to move to the downside, it will bend to the downside, and the price will start jumping but not being able to break the moving average. So this is where our trend change should happen. Let's see what happens. Okay, the price made another move. Here it more or less tested the moving average. It doesn't need to touch it exactly, although I prefer when it's touched, but this was also a valid touch. And now it's retesting the moving average again. We can see some wicks here. This kind of wicks show rejection from the downside, and moving averages should also be considered as a zone, not exactly as a thin line as you see on your charts. So the price here is still testing the moving average. Let's see what happens after this. Okay, the moving average held the price, It made another move to the upside, and now it came to test the moving average again, and it had a nice rejection. A strong wick, meaning that the price was rejected again from the moving average. It pushed the price up again. Let's continue to see. We are still bullish here. Okay, now the price is testing the moving average again. We have a strong red candle, solid red candle closing on the other side of the moving average. We are still bullish here. There's no confirmation that the moving average was broken. The price is still trying to react to the upside. And now this is what we wanted to see. The price tried to react to the upside. It left a high there and it closed with a solid candle below the moving averages. This is the point of failure that shows us that the price wants to start moving to the downside now. It wants to start a downtrend. And this is a nice signal, the price now that it's definitely below the moving average. We have the retest of the moving average. We have rejection there. Here is a good entry point to go short. So after this candle here, you can close your longs if you are long. And after this retest of the moving average, you can actually go short. And what you should expect is something like this. A nice bearish move to the downside. Now let's look at the bullish moving average break, which is the same but inverted. So now we have the price below our moving average. This is our moving average. We see the price going to the moving average and being rejected. Now we see the price going to the moving average again. And while we see rejections here, we are bearish. We are looking for shorts, or we are riding a short trade. If at some point the price breaks the moving average to the upside, that's when we start thinking about closing our short trade and eventually going long after a retest of the moving average. But let's see what happens here. Okay, the price held there. The moving average rejected the price to the downside. It made a nice leg. And now the price went to retest the moving average again. And we already see a wick there. Wicks are signs of rejection. So at this point, the price is still showing weakness. It's showing that it wants to keep going down, but let's see what happens. Okay, another leg to the downside. Beautiful move. And now the price is coming to the moving average again. Now if we see another rejection here, we can continue to be bearish and expect the price to continue and make another low. If instead the price breaks the moving average, that's when we have a trend change confirmation. Let's see what happens. Okay, this was a nice close, guys. This is a solid close on the other side of the moving average. This is a sign that the price doesn't want to keep going down, at least for now. Now, if you want to go long, you want to wait for a retest somewhere here at the moving average and then expect a move to the upside. Let's see what happens. Okay, nice retest. We have a candle with a wick here, the ones that we see similar to this with big wick. It means a rejection from the moving average. Now we are at the opposite side. We are upper side of the moving average. We want to see wicks on the bottom of the candles that touch the moving averages. This already shows signals of rejection and that the price wants to continue. So this is a good entry point to go long. And what the price does is a beautiful move to the upside. Then it keeps retesting the moving average, retesting the moving average, retesting the moving average, retesting. While it's above the moving average, we are still on a bull trend. When the moving average is broken by the price to the downside, that's when a bearish trend starts. Number 3, the break of a trend line. This is a more conservative way to detect the trend change. It's usually detected later than with other methods, but it's also a valid method and it works like this. First we need to draw a trend line, and to draw a trend line we need two lows. Considering that the price is moving up, we want to join two lows, and we can see one low here and one low there. So we can draw a line joining those lows. And the trend line works pretty similar to a moving average. So while the price is above the trend line, we want to see it coming to the trend line and being rejected to the upside, breaking the previous high. We want to see then the price coming back to the trend line again and then being rejected to the upside, breaking the previous high. But at some point, if the price breaks the trend line, this is where you may be in trouble if you are long. This is the place where the trend change may happen. So let's look at this example and see what happens next. Price makes a move to the upside and then it comes to retest the trend line. So here, if we see a bullish sign here, we can go long and expect another move to the upside and break off the previous high. If we see the price now breaking the trend line, this is when we can start thinking about going short. The trend will probably change. So what are you going to do, price? Okay, the price went up. It broke the previous high. It was not much, but it was enough. We have a good engulfing signal here at the trend line. And this was a nice trade to take. Now, the price is approaching the trend line again. What are we going to do? We are waiting to see what happens. If we have rejection from this trend line and these candles that are touching the trend line are broken, then we can go long and expect a new move to the upside. If the price breaks the trend line, again, we expect a trend change and we start thinking about shorting. What are you going to do, price? Okay, a nice move, a huge move actually, a very good move to the upside. And now the price is testing our trend line again. So guys, what are we going to do here? If we see a rejection from the trend line, we can go long somewhere here and expect a break of the previous high, at least this one if you are very aggressive and you want to take just a quick shot, but ultimately we can expect a break of that previous high, but all depends on the reaction that we are going to have here. At this point there's nothing to do yet. So what are you going to do, price? It seems that it's failing. It tried to break this previous red candle. It was not broken. That would be a good signal to go long, but as it tried to break that red candle, the price was pushed to the other side of the trend line. So this is not looking good for someone that is long. When you see the price trying to react to the trend line, but it's immediately pushed again to the downside of the trend line, be careful with your longs and start thinking about shorting. And a nice short would be a possible pullback to the upside, some kind of retest of this zone here, and then the start of a downtrend move. So what are you going to do, price? Okay, the price is actually retesting that trend line. And if we see a decent amount of red here, we can go short and ride the trend. Our red candle appeared, a decent amount of green was deleted, and this was our short signal. And we had a nice move to the downside. So let's look now at the bearish scenario of the trend line break. For a bearish trend line, we want to see lower highs of the price. On the bullish scenario, we were using the lows to draw a trend line. On the bearish scenario, we use the highs to draw the trend line. So the highs of that the price makes, they should respect the trend line. Now we have two possible highs here, and when we have two highs, we can draw a trend line, something like this. Okay, so we see the price approaching our trend line here again, it's testing. And if the price keeps holding below the trend line, we are still on a bearish scenario. Okay, we had a nice move to the downside. Guys, just one thing, maybe this first point here was not enough to, or maybe it was too early to draw the trend line. This one here looks better after this move to the downside. This is more clear that we are on a downtrend. But now we should have more confidence on this trend line. So the price is approaching the trend line again. What we want to see? We want to see rejection from the trend line for the price to make another move. If the price rejects here, it will tend to continue. If it breaks, it will probably start a trend to the upside. So this is our point where everything will be defined. Let's see what happens. Okay, the price respected the trend line. It didn't break it to the upside, so we can still be bearish here. And now the price is approaching the trend line again. What we want to see? We want to see rejection here. And we can short or continue with our short position open. Or if we see the break to the upside, we want to see some rejection and the price starting to go up. What are you going to do, price? Whoa, it breaks the trend line to the upside and now it came to retest the trend line. What are you going to do, price? It moved up. So it broke the trend line. It came to retest the trend line. And the break of this red candle here, it's a good place to think about going long. Guys, if you are short here and when you see this break to the upside of the trend line, you are probably better closing your shorts. Now let's look at the exhaustion. Exhaustion are chart patterns that show us that the price may be tired of moving in one direction. So when the price is trending more or less on a 45 degrees trend, these kind of trends are sustainable. They can hold for a long period. But when the price shoots more vertically above this 45 degrees more or less trend, this is when exhaustions may tend to appear. Why? Because the price made a big run, a very fast run. It used a lot of energy and now it will need to rest. It cannot keep running the same way that it was running. So it will come back down. So let's see how our trend continues. Okay, the price starts to move up. This is normal, it's just breaking the previous high. So on a sustainable trend, now we should expect some kind of move to the downside and then another move to the upside, bigger one and breaking the previous high. This would be the normal shape, similar to this, going up, going down, going up, going down, going up, going down, going up. Now we should expect another move to the downside to continue on a sustainable trend. Whoa, but this is not sustainable trend, guys. This is what I was talking to you. The price didn't come back after this small move that broke the previous high, but instead it started to print very big green candles, one after the other, and taking the price very far away from the origin. Guys, look at this. This is the size of this move and this was the size of this previous move. This was the size of these previous moves. Look how big is this. Look how big are the candles. Look how the price, how the trend changed from a 45 degrees angle to something almost vertical. When you see candles like this is not a place where you want to think about going long. Most beginners are attracted to this kind of moves and they go long right there. But right there, it's when the professional traders are taking profits and even thinking about shorting. Let's see if we have any short opportunity here. And yes, we have a good solid red candle that engulfs the previous green candle. a big red candle appearing after a big move to the upside, this is a signal that the trend will change, at least temporarily. And what happens, price? It made some pullbacks here and started a downtrend. So guys, when you see a big move like this, passing from a 45 degrees to something almost vertical, think about closing your trade, taking profits, and eventually think about starting to short the market because this is coming down. Let's look at the bearish example, a bearish exhaustion. So now we have the price on a downtrend. We have our moves up and down, up and down, up and down. This is more or less 45 degrees. We don't have big moves, vertical moves, bringing the price very far away from this pattern, this small channel that the price is making here. So this is still sustainable. We can still think about shorting here or about keeping our trade, our short trade open. And now we see the price starting to make another move to the downside. So this can still be sustainable, guys. So if the price comes back to our range here, our channel here, this is still a sustainable move. But if it makes that vertical move here, if it keeps going, this will be probably the end of the trend. But let's see what happens. Okay, the price came back up. It didn't make a big, strong move to the downside. It came back up. We are still here on our 45 degrees trend. We are still good to be bearish. What are you going to do, price? Okay, now we see some big red candles. So now this is the price telling us that it's getting tired. It made a vertical move. It made a very big run in a small amount of time. Guys, this was 2 candles to make this move. How many candles to make the same? If this size is the same as this size, look how many candles the price needed to produce a move with the same size. We have here like 20 candles or so. I'm not counting, and here we have just 2. Look how vertical is this. Let me clean this. Look how vertical is this and how it came so far away from this small range that the price was making. This is our signal to get out and close our shorts. You don't want to short, to enter short when you see the price like this, guys. This is where beginners short. And what happens next? Okay, a nice move to the upside. And you see, this red candle was deleted, was engulfed by the previous price move. So here it could be already a good point to go long. This is a signal of a trend change from a downside to a potential move to the upside. What are you going to do, price? Nice move to the upside. Double tops and double bottoms. Double tops and double bottoms are pretty similar to the head and shoulders, but instead of having 3 points, we only need 2. So here we have our price on an uptrend. And what is going to happen here? If we see the price coming close to this top here and being rejected, this is what it's called a double top. We have one top here and then we have a second top here. And it is this failure of the price to make a new high, to break above this previous high, and showing some weakness here, that it's the signal that the trend may be about to change. If you are an aggressive trader, you can start your trade here as you see a rejection. If you are a conservative trader, you can just wait for the price to break the previous low, which is what this one here. And if the price breaks the previous low, then you can start shorting and trading the trend to the downside. We go from consecutive higher lows to consecutive lower lows. But at this point, we are still on an uptrend, guys, okay? At this point here, we are still thinking about going long. There is nothing showing us that the trend is about to change. And what happens is another move to the upside. So guys, we are still on an uptrend. We keep our bias long. The price made a move to the upside and now it came back to the range where we are. Now we should expect another move to the upside. Here we can still be long. This is a good entry opportunity to go long and target above the previous high. So what are you going to do, price? Okay, nice move. You can see that the price went up. It tried to break the previous high, but it couldn't do it. It rejected from the previous high. So here it's a double top information. The break of this candle here, it's already a short opportunity for me. So here it was an opportunity to go long, but now that the price rejected this previous high with so much strength, leaving this weak here, this is an opportunity to short, guys. And what is the price doing after this? It tried to go up again, but a lot of red appearing and a lot of wicks appearing again at the top. So this is another short opportunity for me here, guys. If I was not short here yet, I would definitely go short now. What are you going to do, price? Nice drop. And now the inverse of the double top, we have the double bottom. For the double bottom, we want to see the price moving on a downtrend, moving like this, making a high that it's below the previous high, and breaking again the previous low and making a new low. And while the price keeps printing new lows, it's still on a downtrend. Okay, guys? At this point, we are still bearish, we are still on a downtrend, and there's no point in thinking about doing anything else than opening short trades. But let's see what the price does. Okay, it makes another move to the upside. It actually matched the drawing that I did here. It made another high, which is lower than our previous high, and it made another low that it's lower than our previous low. We are still on a downtrend, guys. Let's see what the price keeps doing. So now the price came to test this previous low and it was immediately rejected to the upside. It didn't break the low and make a new low. This is our low, and this is where the price came to retest the low. And instead of breaking and continuing, it actually gave a nice bullish engulfing signal here. When you see a big green candle, deleting completely a previous red candle with a decent size, this is a nice signal to go long here. We have one bottom, we have the failure to make a new low, the price was rejected. Okay, we have our double bottom here, this is our aggressive entry to go. And what do you do, price? Nice uptrend. We are on a downtrend, making lower lows. Here we have two lows at the same level, and now the price starts to making higher lows. This low is higher than this one and starts to make higher highs. This high is higher than this one. This high is higher than this one. And now, guys, my bonus tip. For a better accuracy, look for confluences like double tops or head and shoulders that appear at resistance zones, or exhaustions of the price that appear at a resistance level, or a double bottom that appear at a support zone, for example, or even a trend line break that appears after a double bottom. When you look for confluences, you are just adding more strength to your trend change signals. So guys, I hope that you enjoyed this video. Don't forget to leave me a like and subscribe to this channel, and I see you on the next one.